Fox Corp nets tripled profit in Q4. Fox News Tubi drive growth. Earnings breakdown 2025. Fox Corp reports impressive Q4 profits driven by Fox News and Tubi success. In an era where streaming platforms are dominating the entertainment landscape, Fox Corporation has demonstrated remarkable resilience. The media giant recently announced that stellar ratings at Fox News Channel, combined with growing advertiser enthusiasm for its Tubi streaming service, significantly enhanced its fiscal fourth quarter performance. This success story highlights how the company's strategic emphasis on live programming, sports coverage, and news content has effectively insulated it from many of the challenges plaguing its competitors as consumers increasingly shift toward on-demand broadband for their video entertainment needs. The financial results speak volumes about Fox's current market position. The parent company of the Fox Broadcast Network and Fox Sports reported a substantial 6% revenue increase, translating to an additional $195 million that brought total revenue to $3.29 billion. This impressive growth was primarily fueled by strong advertiser interest in both Tubi and Fox News. During this period, advertising revenues climbed by 7%, while affiliate revenue saw a more modest but still significant 3% increase. Lachlan Murdoch, Fox's chief executive officer, expressed confidence in the company's direction, stating, "We remain confident that our focused strategy, leadership position in key verticals, and strong balance sheet will continue to deliver value to all shareholders." The numbers further reinforce this optimistic outlook. Fox's fourth quarter net income reached $717 million, or $1.57 per share, a dramatic improvement compared to $319 million, or 68 cents per share, during the same period last year. When excluding certain items, Fox reported adjusted earnings of $581 million, equivalent to $1.27 per share. But here's where Fox's approach differs significantly from its competitors. While media conglomerates like Disney and NBC Universal have heavily invested resources into developing new streaming platforms, Fox has maintained its strong foothold in traditional linear television. The company continues to prioritize attracting large, simultaneous audiences to diverse programming, ranging from IndyCar racing broadcasts to Greg Gutfeld's popular 10 p.m. weeknight show on Fox News Channel. This isn't to say Fox has ignored the streaming revolution. The company has launched platforms including Tubi and Fox Nation. However, these services are primarily positioned as complementary additions to Fox's linear offerings rather than replacements. And this is the part most people miss. These dynamics appear poised for evolution. Fox has announced plans to unveil a new streaming service called Fox One in the coming weeks. This platform will make the company's linear sports and news content, along with additional programming, available via streaming. Interestingly, Murdoch has clarified that the company's intention isn't to cannibalize its existing audience, but rather to attract viewers who don't currently subscribe to cable or satellite services and might otherwise never engage with Fox programming. Breaking down the financial performance by division reveals equally promising results. Revenue from Fox's cable networks increased by 7%, or $94 million, reaching $1.53 billion. This growth stemmed from a $20 million increase in affiliate fees and a $50 million boost in advertising. Additionally, Fox reported $24 million in revenue from alternative sources, including Fox Nation subscriptions. Meanwhile, revenue from traditional television operations grew by 6%, or $92 million, totaling $1.71 billion. Fox attributed a $21 million rise in advertising revenue to continued digital growth at Tubi, while affiliate fees increased by $29 million during this period. Is Fox's hybrid approach, maintaining strong linear television offerings while strategically expanding into streaming, the optimal strategy for media companies navigating today's rapidly evolving entertainment landscape? Or will the pressure to fully embrace streaming eventually force even the most traditional networks to abandon their linear roots? What do you think about Fox's decision to target non-cable subscribers with their upcoming Fox One service? Brilliant market expansion or too little, too late? Share your thoughts in the comments below. Fox Corp ad revenue surges 7% in Q4. Tubi Fox News drive growth as Fox One launches August 21st. In a surprising turn of events, Fox Corp has reported a notable 7% increase in its advertising revenue for the last quarter, specifically the company's fiscal Q4. This growth stands in stark contrast to many other media companies, which are grappling with stagnant or even declining ad revenues during a particularly tough period for the industry. But what's driving this success? Fox attributes this positive trend primarily to its free ad-supported streaming service, Tubi, along with the continued popularity of Fox News. This strategic focus on diverse content delivery seems to be paying off, as the total revenue for the quarter reached an impressive $3.29 billion, marking a 6% rise compared to the same period last year. Out of this total, advertising revenue alone contributed $1.1 billion. Furthermore, the company reported a net income of $719 million, more than double what it earned in the same quarter last year. Additionally, Fox experienced a 6% increase in affiliate revenue and a remarkable 33% growth in other revenue streams, largely due to heightened content revenues. Looking ahead, Fox is gearing up to launch its new streaming service, Fox One, in the upcoming months. This service will bring Fox News and Fox Sports programming to streaming platforms for the very first time, expanding their reach and accessibility. During the company's earnings call, CEO Lachlan Murdoch announced that Fox One is set to debut on August 21st, with a subscription price starting at $19.99 per month. In the cable networks division, revenues reached $1.53 billion, bolstered by a significant 15% increase in advertising revenue. Interestingly, affiliate fees also saw a 2% rise, despite a drop in subscriber numbers. Other revenue within this division surged by $24 million, or 39%, primarily due to an increase in subscriptions to Fox Nation. The television segment also performed well, with revenues climbing 6% to $1.71 billion. Advertising revenues in this area increased by 3%, largely thanks to Tubi, although this was somewhat offset by a decrease in major soccer events. Affiliate fee revenues in this segment rose by 4%, indicating a healthy demand for their content. During the earnings call, Murdoch was questioned about the Federal Communications Commission, FCC. Under the leadership of Chairman Brendan Carr, who has initiated investigations into the affiliate relationships between major networks like NBC and ABC and their local station owners. Carr has made localism a key focus and has been critical of network owners who attempt to impose high fees. Murdoch expressed satisfaction with the FCC's new direction, stating, "We're very pleased that under the new leadership of the FCC is pro-local stations, is pro-competitive. They're bringing a lot of fresh ideas to the regulatory environment, and we're very pleased to see that. As regards to how it affects, our affiliates, we remain the most affiliate-focused broadcasting company in this country, and we don't really see it impacting in any way with our affiliate relationships. If anything, it could improve them." He also highlighted that Fox One will feature live streaming from local affiliates nationwide, similar to offerings from competitors like Peacock, Paramount Plus, and Hulu Plus Live TV. This move could potentially reshape how viewers engage with local news and sports, making it a significant development in the streaming landscape. What do you think about Fox's strategy in the current media landscape? Do you believe their focus on streaming and local affiliates will pay off in the long run? Share your thoughts in the comments. Fox Corp's advertising surge boosts Q4 earnings. What's next? Warning sign for ad slumps, not for Fox Corp, as advertising boom defies expectations. Are you ready for a surprise in the media landscape? Fox Corp just shattered Wall Street's expectations with its latest quarterly results. And the driving force behind this success is none other than its thriving advertising sector. But here's where it gets interesting. What does this mean for the broader advertising market? And can others replicate this success? In the quarter spanning April to June, Fox Corp posted a stellar performance, with total revenue reaching $3.29 billion and earnings per share, EPS, of $1.57. These figures not only surpassed the company's own forecasts, but also left analysts' consensus estimates of $3.11 billion in revenue and 1.11 EPS in the dust. So, what fueled this remarkable growth? The answer lies in the company's total advertising revenue, which saw a significant 7% climb to $1.08 billion. The key contributors to this surge were the free streaming service Tubi, improved ratings at Fox News, and a savvy approach to pricing. However, it's worth noting that the comparison to the previous year's quarter, which featured the highly lucrative broadcasts of the UEFA European Championship and CONMEBOL Copa America, adds a layer of complexity to this achievement. The cable network programming division emerged as the star performer, with revenue jumping 7% to $1.53 billion. Within this unit, advertising revenue soared by 15%, while affiliate fee revenue managed a 2% increase, thanks in part to carriage fee gains that offset declines in net subscribers. The television division also experienced a revenue boost of 6% to $1.71 billion, with Tubi being the primary growth driver. As the new fiscal year unfolds, all eyes will be on the highly anticipated college football and NFL telecasts, alongside the Major League Baseball playoffs. Moreover, the impending launch of Fox One, the company's subscription streaming service, promises to be a pivotal moment for Fox Corp in the coming weeks. CEO Lachlan Murdoch expressed his optimism, stating, "We remain confident that our focused strategy, leadership position in key verticals, and strong balance sheet will continue to deliver value to all shareholders." This confidence is further bolstered by the company's full fiscal year report, which revealed a total revenue of $16.3 billion, marking a 17% increase from the previous year, largely attributed to the 2024 election and Super Bowl licks. Now it's your turn to weigh in. Can other media corporations mirror Fox Corp's advertising success without major sporting events? How might the launch of Fox One impact the streaming service landscape? Share your thoughts on what this means for the future of advertising in media.